Hi, this is Anton Roeger with APC Data Analytics. Thanks for joining us today. Just wanted to run through an example for agents on outside their system, their MLS system. You have individual agent account logins, and we're going to demonstrate how an agent would price a house using our system. Every agent has their own login, and as you can see from the top here, I'm working in the Charleston Regional MLS. So any MLS that you're part of that we have access to the data, you only have access to that local MLS information. So as an agent, what you can do is you can create a list of clients here for buyers or sellers. You have a list of your properties, again, could be for a buyer or a seller, a list of properties that you want to do evaluation on. You have all your old historical charts here under My Charts. And then finally, under New Chart, there's two options here, and we're going to step through both today. So the first one is a property value analysis, and we'll come back later and I'll show you an investment analysis on that same property. So property value analysis. So as an agent, if I click on this, what it's going to take me to is now I'm on my search page. And my search page is, if I know my subject property, my role is to pick the most comparable properties to do the analysis. So there's a couple options here that picking the subject property. So when you select the subject property, it can be one from your property list that you've created earlier. So I could simply go here and select a property that I've added in my properties earlier, or I can just enter in a property address and a square footage. So for this example, I'm going to select one of the properties that I've inputted earlier under property list. So it's this house at 123 Main Street. I've uploaded a picture, I put in some general information about the house and the square footage. So this 123 Main Street represents the subject property we're doing the analysis on. So now I pick my comps for my subject property. So I can simply come here and under category, I have two options in this specific MLS. I can either do a residential analysis or a rental analysis. So we're going to do the sales analysis under the residential. So under property type, we can come here and we can choose single family detached or attached. Well, let's say this 123 Main Street is a single family detached. Well, let's just stick to those for our comp. So we'll choose single family detached. Year built. So year built would be, let's say you have a historical house. Maybe you want to stick to, houses built around that range, or if you have a new construction, maybe you stick to the newer band. For this example, I'm not going to enter year built here. Subdivision, so under subdivision, I'm going to enter the name of the subdivision where this house is located. So its name is Bell Hall. So we pre-populate a list of anything that has that name in it for this specific MLS. So Bell Hall, you can put, and if you hit add, it'll add it to your subdivision list here. You can add multiple subdivisions. If you have enough comps within one, we don't recommend adding additional subdivisions if you have enough comps within one. Price range, so let's say I want to stay on the lower end of this neighborhood. I'll stay 550,000 and below. So I can enter my price range that I want to stay below. Now be very careful not to already identify the value of the property. I know that I'm 550 and below, I'm keeping on the lower end of this neighborhood as a whole, but I don't want to go with a very narrow range, let's say 475 to 500,000. You're kind of already predefining the value of that property. Square footage, again, you can enter a band of square footage. For this example, I'm going to leave blank just to show you how this works. Zip code would come into play. Let's say I don't have a subdivision and I want to do a zip code in a more traditional map search. I can do it with that method as well. Date range, we default to 1 year on the date range. So it's looking for 1 year of comps. This neighborhood has a lot of comps in it, so I can even just limit it to, let's say, I only want 3 months. So I can just do 3 months of comps, so I'll go back to March 10th. So I'm only selecting 3 months of comps. So once you have your search criteria entered, you simply hit search. It's going to search our server for the updated information. We update the MLS hourly. Your MLS, depending on which one you're in, will have a different set of search criteria. We've customized it for every MLS, and depending on which one you're located in, we might have, waterfront property, yes or no. We might have, if it's a 55 and over neighborhood. So it all depends on your specific MLS, your search criteria. So you can see we've returned 22 total results here. Out of those 22 total results, there are 3 active, 4 pending, 15 closed. It geocoordinates everything on a map for you here. It shows you where the properties are located. If you want to be able to identify a certain area, you can simply hit Enable Polygon. Let's say this is the main drive of the neighborhood here. I can just section it off and say, well, let me just deal with these comps on this side of the main road. If you clear the polygon, it'll reset it to the full set of data. And let's say it's like, okay, well, all these are relevant comps. So I'm going to generate an analysis with this search criteria, and you simply hit Generate Chart. As soon as you press Generate Chart, what it's going to produce for you, it's showing you a full analysis of your price versus square foot. So price versus square foot, the key here is the blue house is the subject property. So this is the house at 123 Main Street that we did the analysis on. So the house is 1,850 square feet, and this value that shows 426,774 is saying that's the average value for a house that's 1,850 square feet on today's date for this set of comps. So blue house represents the subject property. The dark blue curve here represents the best fit of the sold properties. The solds are the red house dots. The yellows are the pendings or under contracts, and the greens are the actives. So what we're doing is let's hide for a moment. Let's hide the pendings and actives. So you as an agent can hide the pendings and actives to have your sellers focus on the sold comps only. So if I look at the sold comps, this blue line representing the average, these are pricing bands. So this is a first pricing band from here to here where most of your comps are going to sell in this pricing band, where almost all your comps are going to sell in this outer band. So typically when I see one that's like this one here, I know this is an outlier and it must have some very superior characteristics. And when I start scrolling through the pictures, I can tell relative to the other ones how well it's staged, the upgrades of the house, you know, it's been renovated. So I can tell the positives of the house based off of where it was located on the chart. So I know this is a superior house, whereas conversely, this is an inferior house that's closing down here. So when I activate my pendings, I can put my pendings back on here. So here's my 4 under contract. And any active pending or sold listing, closed listing, will have the pictures associated with them. These pending listings, we don't know what they're selling for, so they're not used in the math yet because we don't know where they're closing. And you can imagine, depending on the negotiability, they'll move in location and depending on how much was negotiated by the buyer and seller. Here's our actives. So our 3 actives show 1, 2, 3. And again, you can show relative to where they're at. And if you had a buyer for this house down here, you can show where it's priced and the features of it relative to the other houses. So we all know that not every house is average. As this is demonstrating here, you have some superior houses and inferior houses and everything in between. So look at this chart as the consumer demand for real estate. So this reflects consumer demand for real estate in 2020 on today's date for this neighborhood and the search criteria that you entered. So that's the best way to look at this chart. Now, this average value here, that's 426,774, we know not every house is going to fall exactly as average. We give you a range of value based off this analysis, but we also allow you to rate the house. And what we decided to do as a group of 30 agents got together and developed this tool is that we didn't want to have the ability to adjust for, well, it's $5,000 because it has a 2-car garage versus 1-car garage, or it's an extra $8,000 because it has an extra bedroom. You know, we don't have the analytical skills on the top of our mind to be able to do that. So what we wanted to do is, we know this blue curve represents the average. We gave adjustments for site, layout, condition, and quality. And when you think about buyers' feedback, is they're usually breaking all their choices down into these categories. How does the site compare to the other properties? And what we've done is, when you first run the analysis, it's assuming everything is average. So it's our average across the board. But let's say the subject property that you're analyzing, let's say it's on a cul-de-sac and it has a nice big private wooded lot, and you feel like it's an above average site, you can go in here and change the rating to reflect that. So if I say, well, this is one of the best lots in the neighborhood, I can simply come rate it a 5-star. As soon as I change my rating, it's changing the location on the chart, but it's also changing the value. So you can see the value range is changing, but it's keeping us within the bands. So it knows what the range is for value for buyers and sellers in this neighborhood. So site layout would be, does it have an open plan? Is it a master down? What are the positive and negatives from a buyer's feedback perspective on this specific property? Condition would relate to, is it a new roof, new HVAC compared to the other properties? How well is the property maintained as a whole? Quality would more reflect the upgrades in the house. If all of these closed comps, these 15 closed comps, let's say they all had hardwood floors and granite countertops and stainless appliances, and the subject property did as well, well, then it would just be an average rating. But if it had those features and nothing, most of the other houses did not, then you might rate it a higher rating for quality. So it's a breakdown of these 4 characteristics that the agent rates. And it will keep you where most of the houses, you can see most of the houses fall within this range here. It's showing the fact that most houses have some positive and some negative characteristics. And if you're closing this upper band, you have several superior characteristics, where if you're closing in this lower band, you have some issues with the house. So what we want to do is also create a seasonality. So today's date is the date that shows up here that you're running the analysis. What it allows you to do is that it's analyzing these 15 closed dates, and it's saying, take any one of these comps. Let's just take this one. So this one closed on March 12th. So what the program is doing is analyzing today's date for a contract versus a contract that was written for a closing on March 12th. So when you go down here and you go to Analytics tab, what it's going to show you is we made a positive seasonality adjustment for the value based off the date range that we have the closed comps. Those 15 closed comps, on average, what we're saying is June 10th is a positive seasonality date. So we're actually bumping the market value up $3,492 based on the seasonality. Now I can simply go back to this chart, and let's say you meet with your client today. And they say, well, thanks for meeting with us today, but we really want to wait until maybe the end of the year to list. So you can simply come down here, pick a different date, let's say December 18th. Now let's go back to the analytics. Well, December 18th, we're actually adjusting the value down $4,204 compared to the 15 closed comps. So we're altering the value based off the date of the input of when you want to sell the property. So for this demonstration, I'm going to just go back and change it to today's date. So if we put it back on June 10th, the other item that we've analyzed is market conditions. So separate seasonality that happens every year on a cyclical basis in your MLS to market conditions. So market conditions is saying long-term, which direction are values going for this property. And what we've done is we've analyzed the market. So we have 15 closed comps in 3 months. So we're basically closing 5 a month. We have 4 under contract and only 3 for sale. We only have 1 month of inventory. So that is a strong seller's market. So historically, what that means with this type of absorption, this curve here is moving higher over time. So think about this whole curve is moving higher over time. So what we're doing is, and you can see 3 of the 4 are above and 1's below. Well, most of these are going to close above. This curve is slowly moving higher. So what we're doing is we're taking the same comp, and we know this one closed on March 12th. What we're doing is we're giving a credit of $2,101 to the subject property because we feel like the prices are going higher from when these closed comps occurred. So we're adjusting that value higher here as well. On the first page, we had our range of value here. What we're doing is, and the property ratings down here, we're also on the analytics providing a bump for the property adjustment, because remember we rated the site as one of the best lots in the neighborhood, so we're giving a credit for having one of the best sites in the neighborhood. But then here's your range of value that we've calculated. But we also give a suggested list price. So this suggested list price here is simply based off, we know the average of these 15 closed comps is 98.12%. So in order to achieve this value here of market value, you can list in this price range and achieve this value. So it's helping the agent convince that to their sellers that, okay, well, you can't just arbitrarily price your house and get it under contract, because a lot of times sellers and agents might agree on a value, but then all of a sudden they list at $475,000 because the seller wants to see what happens. Well, we created a probability of sale here so that you can convince your seller, look, if we list at $475,000, your probability of selling the house is very low, and it's going to take a long time just to figure out you're not going to sell your house. So let's say in a realistic list price range, give ourselves a high probability of selling in a limited number of days. So what we've been able to do is create a suggested list price range to help the agent list it at the right price. We also talk about days on market, but days on market we talk about completely differently. So days on market, what we're doing is we're analyzing the days on market from the final correct list price. So for example, let's say one of these houses, the 15 that closed, was listed for 200 days. Well, they made 4 price changes, and after the 4th price change, if they sold in 8 days, the only number I care about is the 8. So this 9 reflects the 15 closed sales sold in 9 days once they were at the right list price. So it's a very key conversation to have with your sellers, that if we list at a certain price range, the market is telling us within 2 weeks if we're priced right or not. Because if you're priced right, you're going to get an offer and get a ratified contract. So what we've done here is we've taken out that average days on market as a conversation. We want to talk about days on market from the final correct list price. So sales price to list price here, we talked about that earlier. This is the 98.12% of those 15 closed comps. Estimated sales price per square foot. So this is another big conversation that we're having a different conversation. We are not averaging price per square foot. So this is a key concept to understand, is that we know on this chart, the smaller houses will sell for more per square foot than the bigger ones. So what this curve reflects is that any square foot, I can predict the average price. So it's talking about average price per square foot differently. At any square foot, I can find the average price. So this house that's 1,850 square feet, with this analysis, I can come down here and I know that house is worth $238 a square foot. Well, at the same time, if I want to go analyze this house right here that's 1,560 square feet, I can simply come down here, change my square footage, update the chart. Now keep in mind, same set of comps, same seasonality, everything else is the same. When I come to my analytics, that house is $266 a square foot. So we are simply following this curve pattern, and we know at any square foot what the average price will be. So this takes out any sort of issue with averaging price per square foot, because we don't do it. We say at any square foot, what is the average price? So, but you can analyze any house on this chart with the same set of data. So it's still relevant to have a house that's 2,700 square feet in analysis of analyzing a 1,600 square foot house, because we're taking care of the data with a price per square foot curve. So these are all the analytics tab that we have in place. We also have a map feature. On the map feature here, everything's geo-coordinated. You can scroll over any of these houses. You can look at the pictures online. You can scroll through the pictures. If it's not a relevant comp, you can delete it. If you know, well, this is a foreclosure, you can simply delete it from the chart. So it allows you to modify the data and it will recalculate everything instantly. We also have the list format. So the list format has your actives, your pendings, and your closed sales. And it has all the data here that applies to that. You can still look at the pictures on here as well. So you can still scroll through everything. You can delete from the list format as well. But while we're on this, we were talking about price per square foot. And this is why it's not relevant to talk about price per square foot, because you can see we have, here's this one's closing at $266 a square foot. The next one that closed the same day closed at $177 a square foot. So it's not really relevant to average price per square foot when you have this type of disparity between a bigger house and a smaller house. So we're accommodating for that based off the price per square foot curve. The notes tab, so on the notes tab, everything is custom scripted to this subject property for agents to have a conversation with their clients. So on the script here, we can talk about seasonality. If you want to have a conversation in seasonality, here's the conversation right here that you can have. So it customizes the data to your specific set of comps. Days on market. So here's an example, the 9 days on market. So the subject property should be on the market an average of 9 days on market at the correct list price prior to ratified contract. If the number of days of properties for sale extends beyond, the seller may need to lower the price or address the common feedback complaints of previous showings. So again, these are all scripts for agents to use, buyer clients, seller clients, investors, whoever it is. So this note tab customizes everything for your clients. We also have the report feature on here. So in the report feature, I've uploaded a picture under my properties, put my client's information in here, put my information as the agent, my logo, pictures, but then everything is in a short report of here's the chart with some information. You've got your analytics tab that has all this information we discussed earlier, explains each one of these criteria here and calculations. And then it also has a map and list format. So here's your map and here's your list. So it has, here's your actives, pending, closed sales on here. So it has everything in a report format that you can save as a PDF. You can email it to your client. You can print it out if you want. But we also have the option to email this to your client. So if you email this to your buyer or seller, it's fully interactive. So fully interactive, your client can scroll over all the houses, the pictures, but they cannot change anything. They cannot delete any comps. They can't change any dates. They can't change the square footage. So however you send it to them is the fixed format that they get it in, but it is interactive to them. We also recently implemented languages up here. So if you want to send this analysis in Spanish to a client, you simply click on this and everything is in Spanish, including all the notes. So everything is in Spanish here. We also have French. We also put it in currencies. So we have US dollars, pesos, and Canadian dollars on here as well. If you've run a chart and you realize, oops, I forgot some criteria, you simply can come hit modify search here, go right back to the search page and run a new chart. Again, you can delete comps from here if you'd like as well, directly from this chart. So this is, a quick demo of the pricing tool. And I wanted to share with everybody on the call today. I want to go through and show to everybody an analysis with our new property investment analysis here. So we did a property value analysis of this house at 123 Main Street. So here's our new tool. That's the investment analysis. So in the investment analysis, I simply can come here. And then when I click on investment analysis, it's going to take me to this landing page. And it's like, okay, what property do you want to analyze for an investor? And so if I come here, I can either choose a property that I have on my property list. So let's go choose 123 Main Street again. Or you can just put in an address of a property you want to do. So when I begin the analysis, it's going to take me to this 3-step process. So the 3 steps, first step is we need to know the property value. So you can either choose it from a chart that you've run previously. So if I choose this one, it knows the property value that I've run the chart at. Or I can create a new chart like I just did previously, or I can simply enter a property value here. If I enter a property value, let's say it's 415,000, it will override the chart that I've selected. The next step is to do the rental value. So we need to know, well, how much is this property going to rent for? Again, if your MLS has access to the rental information, you can select a chart you've run on the rental. But let's say well, this house is going to rent for $2,200 a month. I can simply enter the value here. On the data input, so step 3 is, this is the rest of the minimum criteria we need to be able to do the analysis. So property insurance, let's say it's $1,750 a year. Annual real estate taxes, we'll go with $4,000 a year. And let's say your client has an 80% loan to value, $3,000 in closing costs. And let's say they got a 4% interest rate on an investment property over a 30-year term. So now that we've entered, and if you're a cash buyer, you just don't enter anything into here. So if we look at the total data input, all we've done is we need to know the property value, the rental value, property insurance, real estate taxes, and their mortgage information, if any. Now there's an advanced tab here that I can go down here, and I have a lot more information I can break down of, what's the estimated vacancy, the house value appreciation, monthly expenses. So let's say I have $25 a month in HOA dues. I can simply enter it here, regime fees, electric and gas. So you can enter everything into the system here for the assumptions, but the minimum assumptions that we shared earlier is this is all I need to enter to do the whole analysis. So when I am done with all my detailed input, I can simply hit generate analysis. As soon as I hit generate analysis, what it's going to produce for me is a set of charts. So here's our list of charts, and I'll step through each one of these fairly quickly. So our total annual investment, it's breaking down cash flow, principal pay down, home value appreciation, and tax benefit or liability. So you can scroll over to each one of these and you can see what the value is in any year. The first chart shows 5-year window, but you can go to a 10-year window and a 30-year window. So it shows you the value of each one of these over each time period. We also have on here your annualized rate of return. So annualized rate of return is the same system. You have 5-year, 10-year, 30-year. So let's say I held it for 10 years, then my annualized rate of return is 12.5%. So 12.5% reflects after-tax investment money on your equity if you hold the property 10 years. And this is a great way to compare properties A, B, and C is what your annualized rate of return is. We also have cash flow. So there's almost no cash flow the first year, $9. Then you have, it grows over time as you're basically getting more rental income on it. So if your client is hyper focused on cash flow, this is a good chart for them to look at. Here's your tax benefit liability. So the first 6 years, it's a tax benefit, but then it starts becoming a liability because, again, your cash flow is outrunning your expenses, so you're actually starting to make profits on it. And it shows you lose your depreciation the final 2.5 years. And then principal pay down. So if you have a mortgage, here's your principal pay down over time. And then here's your home value appreciation. So with the assumptions that we did, we set a 3% assumption. So that house that you purchased for $415 in 30 years, it'll be worth $1 million at a 3% clip, which is the assumption that was entered. We also have home equity. So in home equity, it shows your home equity growing over time. And after 30 years, you've paid off your mortgage. So your home equity matches what your home value is because you have no mortgage after this 30th year. We also have the analytics tab. So in the analytics tab, it simply shows you your cumulative years. So here's 1 through 5, 1 through 10, 1 through 30. It shows you your return on your investment, and it has all the assumptions down here to share with your client. So, and again, if you realize one of these assumptions is incorrect, it's very simple to go back, modify the input, make the change, and come right back to the analysis. We have a notes format on here. So here's scripts of each one of these charts that we're talking about to have a conversation customized to this specific example for your clients on each one of those charts. And then finally, we have the report format. So the report format has, again, a format that you have picture, information, logo, and then the charts. And if you want to show your investor all 10-year window, you simply just put it at 10 years. And when you print this out, it'll have everything as you see on here. However, the same option is available is that if I want to share all of this information, I can email it to my clients. So when I email it to my clients, it's fully interactive as well. So this is a new tool that we just rolled out this past week, but it is live in production. So if you're currently an APC user, you simply can come here and it'll be a second option under property value analysis. The other thing, I'm just looking through any more questions on here. I think we kind of addressed any questions that people have online. If you do have further questions, so our website is pricing.apcdata.net. So you're more than welcome to go to this website, and you can inquire about signing up if you're not currently an APC user, or if you're inside the system, this is our intercom button. So when you click on here, the intercom button is a message to our team, and we can respond back with answers. So this is an internal intercom system that we can respond to you directly through the program. So again, this webinar is recorded, so if you want us to send it to you, feel free to reach out to us. We do this every 2 weeks, and we have different topics that we cover as well. We continually are working on improvements in the program, and as we roll it out, we will implement it in the existing system. And just want to let you know, this is a tool that was created by 30 agents in Charleston, South Carolina. And we continue to get feedback from agents around the country on what they want to have implemented and what they want to see, and we're continually making improvements on this. And before I leave everybody, if you have old charts that you've run, you can simply come here to My Charts, and it shows you, you can go back and look at a chart. This is the one we ran earlier. So you can simply come back to the chart, analyze it. You can go modify the search, so you can go back and enter everything in the system. Just want to thank everybody for their time today. I hope your market is busy and active, and everybody's getting back to work and selling as many houses as you can. So feel free to, again, reach out to us at pricing.apcdata.net or hit us on the intercom button here, and we're more than willing to help answer any questions. Thanks for everybody's time today.